Hey, good morning. Let's go over today's trade plan. So in the overnight session, responsive sellers were active at yesterday's high of 86.25 and have been dominant on the smaller time frames here in Globex. Heading into the open, our overall bias continues to be neutral, and we will have to see some clear-cut strength in the market and some upside momentum in order for ES to break out above 85.75 to 87.75. On the downside, we have pre-market support at 79.25 to 81.25 and the micro bull bear at 77 to 78. Now, if buyers are going to step in, then ideally ES remains above 79.25 to 81.25, but 77 to 78 would be kind of the final spot, at least short term, where buyers would still have a chance to step in and push ES back up towards the gap fill towards 85.75 to 87.75, and then at that point in time, if we have a rising advanced decline line and the NYC tick is holding above zero and showing some nice upside momentum, then we could even break out beyond initial resistance for a test of 89.5 to 91.5, which marks the all-time high. On the downside, a break below 77 to 78 would tell us that the sellers that were active in the overnight session are really starting to press, and it could result in a short-term shift on the smaller time frames where sellers become more dominant, and from there we can go back down and test yesterday's low at the initial support zone of 71.75 to 73.75, and then we would really have to assess how the market is shaping up to be in real time. So in order to break down below initial support, we also have to see some excess weakness in real time in the underlying internals. So in order to really break down below initial support, we would have to see a pretty weak advanced decline line, which is trending lower, and the tick holding below zero and printing some fairly negative values. Until then, the market can maintain this neutral and balanced state. So unless we see some decent strength for an upside breakout or some pretty decent weakness for a break below initial support, the market can continue to balance in a range. So as an example, yesterday as the market head down towards the initial support, which was 71.5 to 73, we were not seeing excess weakness on the advanced decline. And even the momentum wasn't extremely bearish, and that ended up attracting responsive buyers at the 71.5 to 73 yesterday. So at this point in time, if we head back down there again and we are not seeing any major weakness on the advanced decline and the other markets are not really selling off in a big way, then buyers can still technically enter. But if we head down there to 71.75, 73.75 on major weakness, for example, with the advanced decline line, holding below minus 13 to 1500 and really trending lower, and the AD printing some major downside extremes, then the support zone may not hold, and we may have to go lower to find the next group of responsive buyers. But again, we would have to see some real weakness for that to happen. And until then, we are going to be in a very balanced state, and that neutral bias means that sellers can be active at resistance and buyers can be active at support. So off the open, how the market responds to 79.25 to 81.25, 77, 78 is really going to help set the short-term bias on the day. And then on the upside, as long as the AD is trending higher, it doesn't have to be at an extremely high value, because yesterday's close is at 84.5 and the advanced decline line is calculated based off of the previous day's close. So on the upside, we don't have to see major strength in the AD to go higher, but it does need to be in positive territory and at least trending to the upside. And then more importantly, we need to see some pretty decent upside momentum via the NYC tick in order to break above 85.75 to 87.75 and test 89.5 to 91.5. And then bigger picture, we know that we're at some pretty decent resistance here. 85.75 to 87.75 and the 89.5 to 91.5 mark the larger time frame balance area high as well as the all-time high. So we know that we are at some bigger picture resistance, and for that same reason, we need to see some pretty decent upside momentum in real time in order to break beyond that and test some higher prices. And that's why our bias is still neutral, because technically there's still a chance that sellers could be active here at the balance area high, and we can fail to break out. And that's why we're paying so much more attention to what's happening in real time, and we need to really be very mindful of the real time momentum situation, because without upside momentum, we're not really going to have a sustained upside move. So if the market, let's say, attempts a breakout above 85.75 to 87.75, but the tick is printing very mediocre values and the advanced decline line is holding below zero, then that's not really the underlying environment you want to see to get a sustained breakout. So then that breakout would be prone to failure. So we do have to be pretty nimble here at the balance area high and overall exercise some caution. In terms of the economic reports, we don't really have any major reports due today. We do have the Apple launch event that starts at 12 p.m. Central Time, and that can have an impact on NASDAQ, which can then impact S&P a bit as well. So just something to be mindful of, that Apple kicks off its event at 12 p.m. Central Time. So these are the main ideas heading into the open. Again, let's keep an eye on pre-market support. As long as ES is holding above it, there's still a shot for buyers to step in. If you are watching the Russell, ideally you want to see it holding above 1250 to 1251 half, and then that would still leave the door open for buyers to step in the Russell. And lately TF has been pretty helpful in determining the intraday bias. So if we are going to get a decent upside move, then ideally you want to see the Russell holding above 50 to 51 half. So those are the main thoughts heading into the open. Let's see if the buy side can maintain control here, and we'll take it from there.